Yep. Pop any messages we've got in the chat box. I know a lot of you did submit questions that you got ready ahead of time. We have got those. I know that Ruth has addressed a lot of those in the session already, so you'll see those covered. But throughout, you are able to send direct messages to Paul. If you want to ask anonymously, you'll find Paul Harwood from the VetYou team. Just double click on his name and pop the message in the chat box if you want to ask anonymously, or you can just pop the questions in the chat too. So we're going to start off with a brief presentation. We're going to tell you a little bit about us as VetYou for anyone that's new to us. Then we're going to hand over to the fantastic financial advisor that we've got for you this evening, Ruth Downs, to tell us a little bit more about investments from savings to ISAs. And we should have plenty of time for some questions and answers at the end as well. So whether you are watching live or whether you're catching the recording, thank you for gifting yourself this time for being here. I think we can probably look at getting started. I know Paul's going to keep admitting people in the background as well, but let's get going then. So thank you, like we've said, for being here on this investments event that we as VetYou have held for you this evening. We wanted just to take a minute to tell you a little bit more about VetYou and a little bit more about why we're so passionate about this as a topic. So VetYou was founded by 4 vets. You can see here we've got Matt Dobbs, Paul Harwood, who's on the call with me at the moment, Ebony Escalona, who will be a familiar face to many of you, I have no doubt, and myself, Katie Ford. We are all veterinary surgeons, but we've got a wide-ranging background from being employers, employees, self-employed, locums, business owners, equine, farm, small animal, ECC, side hustlers, speakers, consultants. We've got a wide range of backgrounds, so we know how important finance is to everyone within our profession and how little that it's talked about. So we like to think ourselves as the home of an independent you, and putting you back in control of your personal finances, meaning that you can put your energy, your time and your attention to the things that matter in your life elsewhere, as well as busy professionals. Now, we have 3 pillars at VetYou that we want to help you protect your health, protect your income and to protect your future. And at this point, I'm going to hand over to one of the VetYou original founders, Paul Harwood, to tell you a little bit more about these 3 pillars and why we're so passionate about them at VetYou for veterinary professionals.
Cool, thanks, Katie. Yeah, when we set up VetYou, it was really to try and look after you, put you back in control. And the 3 areas that we sort of look after and focus on and are, as Katie said, our pillars are your health, looking after your health. Because at the end of the day, if you're not happy and healthy and at work and feeling up for it, everything else is going to be a lot harder. So we've certainly got a lot of great products around private health insurance, looking after yourselves, getting you back to work, getting you back healthy quicker. Next one is income, looking after your income, because if you can get stuff sorted now, get started now, get those good habits started, you can then hopefully set yourself up for success and do all the other stuff. If there's anything else you want to do in your life, it's a lot easier if you have that secure financial backing behind you. And then finally, although it's probably one of those things that we always like to put off and think about, but it's looking after your future. If we want to have an enjoyable 40s, 50s, 60s, 70s and 80s, the earlier you start thinking about it, the better. So we've just come up with these 3 pillars, which we'll talk about as we go: looking after your health, looking after your income, and looking after your future.
Amazing. Thank you so much, Paul. So what does that actually look like? What do we do with that? Well, we are really passionate about helping members of the veterinary profession with education, with support, with community and signposting on a variety of topics that you can see here. Paul's mentioned a lot of them already, everything from income protection, pensions, mortgages, savings and investments that we're talking about this evening, accountancy, tax, side hustle finances, budgeting, life insurance, healthcare plans, debt signposting. And why is it that we do this? And Paul's touched so nicely on the fact that we have those 3 pillars, and they do come from our own stories as veterinary professionals, seeing all the various sides of what stages we took out financial advice and what stages we got support and we learnt these lessons, some of which, for example, Matt, very young and it paid off well for him, and others of us, for example, Ebony and I, that really learnt it a lot further down in veterinary life. So we do it because we believe that the veterinary profession does work extremely hard. And so infrequently we're taught about how to look after our personal finances. And we also know, just as I've written on the screen here, that it can have a massive impact on our well-being. And we've seen so many times that well-timed professional support can be really transformational. We know that you've all trained for years, and we believe that everyone does deserve access to financial support, financial education, to make it not scary, to break down barriers, to getting the information that we need, and also to make it that there are no stupid questions, because there's so much stuff that we think, oh, should I be asking that now? Absolutely, yes, this is the time for you to ask about it. So we're not going to talk about VetYou for a huge amount longer. I just wanted to flag to you that we've got a whole menu of events for this year that are covering a whole range of topics. There's a list that Paul will pop the link in the chat box throughout, so you can jump in there and you can have a look at them. They're always free, they're always recorded, they always include time for question and answers. They're open to all members of the veterinary profession. This is not just vets, this is not just vets and vet nurses, it's for all our teams. So please do feel free to share that with your colleagues, with your friends within the vet space, because we truly believe that we all need this, and there are people out there like the fantastic partners that we have curated along the way that are just happy to share their knowledge, to help educate, to help you realize what the next step is as well. And we've just added to the list a 2-part series for May for veterinary nurses specifically as well. And you can see here we've got some familiar faces as fantastic co-hosts, as people that have used VetYou regularly as well. So Paul is going to tell you just briefly a little bit more about the financial partners that we've curated along the way that we're pleased to have. And then we're going to get started with a session on investment. So Paul, over to you.
Okay, thanks. Now, one of the big things that I always worried about, and I think lots of people worry about in the vet world, is who do you trust? Who do we go to talk to about our money? Who do we trust? Who are the experts, and who's going to look after us and who isn't? And so hopefully what VetYou is there to do is to act as that trust pilot, that way that we can use our community to recommend and signpost and point you towards those experts who get us. So what we've got is a really big, wide range of curated professionals from many, many different areas, from personal finances, which we're going to hear about the awesome Ruth in a few minutes. We've got people who are experts in HR, accountants. If you're thinking of setting up a side hustle or going out and becoming a locum, have a chat, make sure that you've got a good accountant behind you who understands the veterinary profession. What about tax issues, IR35, anything around tax, etc.? We've got some experts that we can point you towards, mortgages, pensions, all of that sort of stuff. So a wide range of people who can help you throughout your financial journey in whatever direction it happens to go on. So really all I'd say is don't wait until you listen to the mortgages webinar or listen to the pensions webinar. Get in touch, give us an email, and we can introduce you to someone who other people in our community have already used and have recommended and fed back and said, yeah, these people, they get us. So get in touch.
Thank you so much, Paul. And yeah, we've had fantastic feedback about our partners so far, because yeah, they want to hear about where you're up to. They're not people that are just interested in us having massive windfalls or huge estates. They understand our profession. They understand the what is involved with it as well. So we're really pleased to have one of our fantastic financial advisor partners giving this talk this evening on investments. And this is Ruth Downs from Reflect Financial Limited. We've been really pleased to collaborate on a number of events over the last year with Ruth. She describes herself as an experienced financial advisor with a difference. She is definitely genuine, friendly, and an all-round animal lover. We know that for sure. She always makes things super understandable. She's not going to throw jargon out there. She's just really passionate about this, and I know she'll tell you why in a minute. Just popped up a couple of the fantastic recommendations that we've had for Ruth from members of our community. We've got a recommendation from Lacey here, who is a vet nurse, and from Joe here, who is a veterinary surgeon, that both say similarly, you know what, Ruth is just out here because she wants to help you as professionals. And she has kindly opened her diary up as well, if you do want to ask her anything. Now, I'm going to hand you over to Ruth. She is fantastic. She's going to make this very understandable, and I know she's got plenty of time for questions at the end as well. So thank you so much for being here, Ruth, and I'm going to hand over to you now.
Thank you so much, Katie, and thank you, Paul, as well. It's a lovely introduction. So good evening, everybody. As I've been introduced, I'm Ruth Downs, and I'm a financial advisor, and I work with Reflect Financial. So Thank you for allowing me to be here, first of all, today and chat to you all about everything savings and investing. First of all, congratulations for being here tonight and taking the first step into taking control of your finances. Just attending is such a huge step. There is a lot we're going to go through tonight, and I'll be dropping some awesome knowledge bombs on you. So I hope you're all set and ready to go. Now, I have to keep it quite top level to make sure, number one, I get to cover as much as I can to as many people as I can. And number two, so I don't make your head hurt by going into too much depth in one area. So have you heard of the saying that you can't eat an elephant whole? It's important to go step by step. And I do welcome any questions. And if you want me to go into your specifics, then please email into VetYou and I can organize to chat to you on a one-to-one basis, and it's completely free of charge. Next slide, please, Katie. So I absolutely love being able to communicate everything financial, and I think it's important to start by telling you my why. Finances are very personal, and this wonderful woman on the screen is my mum. She lives in Cape Town, which is where I'm actually dialing in from tonight. So I'm just coming in to check on her for the first time since COVID. Her health massively deteriorated a long time ago, and I had to look into her finances. And I reached out to a couple of people for help, financial advisors, and I didn't get the help that I needed. They said I wouldn't be able to understand it in the time frame, and also I had nothing to invest, so they pretty much weren't interested. I knew there was a massive gap in the industry, so I was determined to make sure that anyone that was in my position again would always have access to financial advice. So when I say I'm here for a chat, please know that I mean what I say, and I'm always here with any questions you have. There is no such thing as a silly question. So that's my why. And the way that I work with my clients is that I never tell them what to do. I give them their options, and then we work together to find the best solution for them. Next slide, please, Katie. So who do I work with? We choose to partner with a company called St. James's Place. They are a FTSE 100 company. That means they're one of the largest 100 companies in the UK. I think it's actually over now, definitely 148 billion. What does that mean? It means that people trust us with their financial futures, individuals, businesses. We're here to, to help protect them. So the next slide, please. Here on the screen are some of the questions that I get asked, and I'm sure that they will be on your list too. So just have a look through some of those. I have included some time at the end to go through any specific questions you may have, but please put in the chat if there is anything you want answered. You can message Paul privately as well, and we can answer them, and I'll come on to them at the end. And I'll also be answering all these questions as we go through. Next slide, please, Katie. Now, step one, this is the financial questionnaire. And it's what I give my clients, and I've shared it with VetYou, and I think the wonderful Katie has created a download link to it. I'm a down-to-earth, straight-talking girl from Manchester, so excuse some of my sayings, but when it comes to saving and investing, you can't put the cart before the horse. There are some basics you need to put in place first. The financial questionnaire doesn't take long to fill in, and it will help you answer how much should I or can I invest, and what factors should you be aware of. So do you know what your disposable income is at the end of every month? Do you know what disposable income, what that means? Disposable income is what you're left with when you've paid all your bills and expenses every month. So for example, if you're employed, you get paid a certain amount into your bank, and then you have a monthly or sometimes annual essential bills like gas and electricity, council tax, buildings insurance, etc., that needs to get paid. And you also have discretionary bills. So these are things like, I don't know if you're like me, Netflix, Amazon Prime, or gym memberships. This questionnaire will help you kind of work out how much you have left over every single month. And it will also help you to become more mindful of where your money goes. And it actually helps some of my clients cancel unnecessary bills that they didn't even know they were still paying. It'll also help you work it out, like I've said, how much spare you have for saving and investing. And it's so important to keep it updated because it will change and constantly change. And I mean, especially with a steep rise in household bills set for the spring. And I don't know if you guys have heard of this coming up, but it's set to rise by 54%. And this is an extra £693 per year increase for the average customer. So it's just something to be aware of. And also, if you have the questionnaire, you can plan, put it in there and make sure that you've got it covered. Like, I digress about this, but it's definitely something that I'm going to be updating on my financial questionnaire. So the next one, please, Katie. So this is the next step. And this is, as you can see, some of the absolute chaos that the storm has caused. So this is like the recent stuff that's happened to pretty much everybody. And I bring this up because it's all about you saving for and having an emergency fund, also known as a comfort fund or a rainy day fund. We all need this in case the unforeseen happens. And we need money in the bank that we can easily access. So, for instance, it could be once you've worked out what your bills are every single month, your discretionary and your essential, could be, say, £1,000. Now, if you have about, say, 3 times that, so £3,000 in your bank account, that would kind of do as like an emergency fund so that if your boiler breaks down or you need to do car repairs or something like that, you can easily access it, dip into it, use it for what you need for those emergencies. And then, of course, out of the disposable income that you have every month, then top it back up to that kind of magic level. Now, not everyone is the same, so yours might not be 3 times your bills, depending on your circumstances. It could be 2, it could be more. But that's something that we can always kind of work through together. The next slide, please. Now, based on the emergency funds, you'll also, I think it's a bit prudent of me to talk about as well, protection. And I do want to briefly touch on this because underpinning absolutely everything I do as a financial advisor is protection. You guys don't have it easy, you know, vets and nurses, and I hear all kinds of stories having proudly worked with you and understanding your industry. You guys are at the front of all action, but it isn't just if something happens on the job. It can even happen like while you're going to your job, God forbid, but in like a road traffic accident that I know has happened to people just traveling to work. It is vitally important to make sure you have your income protected through something called income protection. Now, policies only tend to pay out up to 60% of your total income, as let's face it, if it was 100%, there would be absolutely no incentive for anyone to go back to work. But it makes sure that all your important bills are covered. And the reason why I'm mentioning this today is that any investments, and savings plans that you put in place can also continue. And it can really help as well in reducing any money worries or anxieties that you feel, and could be as cheap as the price of a cup of coffee a week, depending kind of on your medical history. Now, onto the main event, obviously. Next slide, please, Katie. Savings and investments. So why is it that, you want to save? What is it that you want to save for? And I'm going to prompt you to think about a couple of things and write them down on the sheet that you've provided you with, like your specific circumstances. Do you want to save for unforeseen circumstances, such as, unfortunately, for storm hits or the future? Is it for retirement? Is it for a future family? Any of these that are on screen. And you know what? Even just the last point, maybe it is that you just don't know what you want to save for, but you feel like you should. We can work together to kind of create that plan for you and kind of your reason why. And it's completely okay. We'll start at the beginning and we'll work towards whatever your goal is. There are so many reasons why people save, but whatever it is, that is what advice is all about. It's about really getting to know you guys and understanding what it is you're wanting to achieve, and then just simply putting a plan in place for that. So the next slide, please, Katie. Once again, these are some of the questions kind of for you. take a moment to just read these and think about the questions specifically for your circumstances. They're so important. So let's just take the first question. Why do you want to save? Sounds quite a simple question, but have a think now what it is, because, or what it's for, as this makes a massive difference to what savings and investment vehicle is going to be recommended or might be suitable for you. You can save monthly, because I get that a lot. Oh, what is it? Do I have to save monthly? Can I switch it on? Can I switch it off? Can I do lump sum payments? Yes, you can. You can have it however you want. Is it easier to do regular payments every month to come out? You can also alter these if you want. You can alter the day of the month that it comes out. Or you might say, do you know what? I want to save every 6 months and then do a lump sum payment, or I want to do an annual payment of just one lump sum. That's also absolutely fine. Now, something else that to have a think about is, do you need access to this money in the near future? So think about your time frame. Are you prepared to leave it for a while? And if so, for how long? Will investing this money also affect kind of your day-to-day standard of living? Because this is something that we need to talk about. You don't have to save for the sake of saving. It has to be the right thing for you and your circumstances. So you also don't have to save for one thing, one pot for one thing. You can have a number of different pots and a number of different goals, and we can work towards each one. So anyway, these questions and your answers, it will help you look at, where can I put my money? That's what it'll help answer. What are my options, and what does it all mean? And how do I decide what to do? So the next slide, please, Katie. So these are some of the different kind of savings accounts that you can have. And now let's rewind a little bit. A savings account is simply an account for you to put money in and earn interest. So what are interest rates? For some of you, this might be really easy, but like I said, I want to give some kind of basic advice for everyone, and it might just stand as a bit of a reminder. Interest rates is what you pay, or interest is what you pay for borrowing money and what banks pay you for saving money with them. Interest rates, they're shown as a percentage of the amount you borrow or save kind of over a year. So if you put £100 into a savings account with a 1% interest rate, you'll have £101 a year later. So I hope that kind of makes a little bit more sense. Savings interest as well, it's paid tax-free, and most kind of won't pay any tax on kind of savings interest at all. Basic rate taxpayers can earn kind of £1,000 a year tax-free, and higher rate taxpayers £500. So it's only those with kind of very large amounts of savings who would need to worry about this. And that's, well, percentage of the population that's kind of equates to is like 5%. So majority of us, it won't matter. So what are your options? I had a quick look at the latest rates that are out there at the moment to give you guys a bit of a guide. Now, there is usually no charge for setting up savings accounts. So that's the other thing that I wanted to mention, because I know cost can be sometimes a factor for a lot of you. So you have what is known as, say, an easy access savings account. What does that mean? Easy access is, as it says, you are easily able to kind of dip into it when you want it, however often you want it as well. Now, those interest rates, I think one of the highest I could find at the minute is 0.75%. So it's quite low. Notice savings accounts. These are the next ones. So once again, it's kind of as it saves. These are accounts that you have to give notice to access that money. And there are different ones for kind of different days. The more days that go on that you don't need to access it, the higher the interest rate. So 1.08% for, say, 120 days. And then it goes lower, say, for 32 days. So that's like 0.8%. Then fixed rate accounts. So these are ones that will offer you, as it says, kind of a fixed rate for the amount of time that you leave it. It operates at the same principle that the longer you leave it, the more kind of interest you will get. So 1.45% for 1 year, and then you've got 1.71% for 2 years, etc. maybe just a little bit of homework for you guys is to kind of find out what your bank account interest rate is actually giving you. And it can also pay to shop around and find decent saving rates as well. There's also something called regular savings accounts. So what are kind of regular savings accounts? The clue's in the name. Most regular saving accounts require you to put money away each month with interest paid yearly, or kind of unless it's otherwise stated. They offer higher interest rates than traditional fixed or kind of easy access savings account that we talked about, but they tend to kind of impose much kind of stricter terms and conditions, such as limiting the number of withdrawals you can make, or forcing you to make a deposit every month. And the rate usually only lasts for a year. So you see why now it's so important to know the timeline of how long you would like to leave your money. Next slide, please, Katie. We're going to move on now just to kind of individual savings accounts. And there are lots of different types of individual savings accounts, as you'll be able to see on screen. I'm going to just spend a little bit of time here because individual savings accounts, also known as ISAs, they are absolutely fab. They're a great tool that we can use to make the most of our savings and investments. And why? Because we can put money away into them. There's no income tax or no capital gains tax that is actually taken off the returns. And they can provide us with a tax-free income when we get to retirement, if that's what you want to do. Every adult has an allowance of £20,000 each year. So there is a limit due to the tax advantages associated with them. So this is £20,000 limit that will reset for you to start saving again if you've already reached your limit in that tax year on the 6th of April each year. Now, it's not just for kind of adults as well. If you have any children, they also have their allowances, so you can save for them as well, up to kind of £9,000 a year. You also have what's known as easy access cash ISAs. So also kind of offering usually around, I looked at about 0.6% the rate. Easy access cash ISAs let you take out your money when you want without penalty. So we're a good option if you know you'll be dipping into your savings, or if you're not sure. You can have the same with kind of fixed rate cash ISAs. So I saw one for 1.46%, and that was for 3 years. So fixed rate savings are designed to lock money away, like I've said, for a set period and offer kind of rate security in return. I mean, yet by law, kind of cash ISA providers, they must allow you to access your money whenever you want. But something to note is that they can kind of levy quite heavy penalties on withdrawals, say quite a lot of interest. So it's definitely something to look into, or, book a call and we can chat through it further. Now, have any of you heard of something called a lifetime individual savings account, also known as kind of a LISA? Now, I bet you're thinking this is kind of a long time to have an ISA, a lifetime ISA. Now, let me explain. A lifetime ISA can be opened by anyone aged between 18 and 39 years old. You can save up to £4,000 a year in it, kind of towards your first home or to retirement. And the state then adds a 25% cash bonus on top, up to £1,000 a year. As you need to kind of have a lifetime ISA open for a year to get the first time buyer bonus, even if you're not sure you'll kind of use it, it's definitely worth opening for, like, even if just with like £1. Plus, you can kind of earn interest on whatever you save. And it's an individual savings account, so that interest is tax-free. Now, remember I said for an ISA, you have a limit of £20,000 in a tax year? Well, the money you put into your LISA will count towards that. So if you put the maximum amount of £4,000 into a lifetime ISA, also known as a LISA, like say this tax year, you'll also get your 25% state bonus, but you'll be able to put £16,000 into other individual savings accounts. The bonus you get doesn't count towards this year's ISA allowance, but just so you're clear, a lifetime ISA, that age limit is only for that. Any kind of individual savings account, you can open to much later. It's only for that kind of first one. Now there's a bit, sorry, only to mention about that lifetime ISA age limit. Now, quick mention of something called Help to Buy individual savings accounts, because a lot of people that I speak to say, well, hold on a minute, I've got something called a Help to Buy. They closed new accounts to Help to Buy ISAs on the 30th of November, I think it was 2019. So if you've already got one opened, a Help to Buy ISA, you can keep saving into your account until, I think it's, like I've said, November 2029. And it's once again, it's a government scheme that was designed to help you save for a mortgage, to mortgage deposit to buy a home. Contribution amounts towards this were slightly different to the LISA, but the main one that a lot of you have heard of is one called a stocks and shares individual savings account. As the name gives away, it is an individual savings account that is invested in a spread of kind of stocks and shares based on something that's called your attitude to risk. So the percentage per year you can get back, depending, of course, on the amount of risk you want to take, can be a lot more than a cash ISA. Think of it like this. On the whole, usually the more risk you take, the potential is for more return. But the low risk, like say current accounts where you can easily access your money whenever you want, that tends to give, as we've seen, a low percentage of return. Now, past performance is no guarantee of future performance, but you tend to see kind of much higher percentage returns with stocks and shares ISAs. But there is usually a cost with setting it up, because and there only is a cost when you set it up. It's not on withdrawals. There are lots of places where you can get them. Some you can set up and manage yourself and will have cheaper fees as you pick your own attitude to risk for your investment. Or there are ones you can have, like with me, where I will help you manage it for you, and we work out together what your attitude to risk is. And this will have a higher initial charge because, of course, I'm going to be managing it for you. But the power of what VetYou have offered you, of having a BFF, so also known as a best financial friend, is to make sure you have the right investment for your needs. So once again, don't forget, if you're thinking, oh my gosh, my mind is blown just by the amount of information coming at me right now, then just pick up the phone and I'll happily talk about it specifically for your circumstances. Now, there's a special mention to something else, and this is premium bonds, NS&I, which is called National Savings and Investments. They offer premium bonds, which are savings accounts you can put money into and also take out when you want. Now, this is where the interest is paid depending on a monthly kind of prize draw. You can win £1 million to £25 a month. The minimum purchase amount is about £25 for one-off purchases, and you can also do monthly standing orders. But the maximum amount you can hold is £50,000 into premium bonds. And the age limit, you've got to be over 16 to buy them, as I'm sure you all are on the call today. And it's a game of chance, so it's a lottery. I read a statistic that if you lined up everyone with £1,000 worth of premium bonds in order of their year's winnings, and the person halfway along would have won, drum roll please, not a penny. In fact, you'd need to walk past about 70% of the line until you hit the first £25 winner. However, you could be that person that gets £1 million. So it all depends on what you like to do and how you want your money to, or where you want it to be put. Next slide, please, Katie. I know we spent a lot of time on that one. I do want to talk to you about something called inflation. So what is it? What is inflation? I'm sure a lot of you have heard the term, but it's simply the rate in which prices are rising. So what a basket of goods like bread and milk cost last year to what it cost this year. If the price of a bottle of milk is £1 and it raises by 5 pence, then milk inflation is 5%. Now, I don't know about you, but recently I've seen my weekly shop price kind of go up quite a lot. And the reason for this is that in the last 12 months to January, prices rose by 5.5% on average. It is so important that any money that you have spare over and above your emergency fund and to kind of pay, obviously, your monthly bills is to put into some form of savings vehicle. As you can see from the graph, over a 20-year period, left to the effects of inflation, your money would have lost 34% of its purchasing power. So even though you'd have £10,000 still in the bank over that 20-year period, the amount that it would only buy is, as you can see on the screen, is you'd only have about £6,554 worth of kind of place to buy. So one of my clients actually told me that she'd accumulated nearly £30,000 under a mattress over the same kind of like a 20-year time period. So you can imagine I nearly fell off my chair when she told me that. But don't worry, I did manage to sort her out and I made sure that it was in the right place. So the next slide, please. So pension kind of ladder, you'll be able to have a look here. These are some of the questions that people ask me about retirement, and it'd be rude for me not to talk about kind of saving for retirement. So let's throw this one in the mix. What is a pension? A pension scheme is simply a longer-term savings plan to help you save money for later life. They are also an investment kind of tool as well, and there are some fantastic tax advantages with them, as the government want to encourage you to save up for it. So how do they work? You save some of your income regularly during your working life into a pension, and this gives you an income in later life when you want to work less or kind of retire. That's the meaning of a pension, kind of security for when you're older. So the 100-year life is something that I bring up time and time again, but it's something we all need to think about and start prepping for. Now, I'm not sure when majority on the call were born, and I'm not going to ask you to put it in the chat, but let's just take 1987, midway up the ladder. You can expect to live up to 97 years old. Or if you were born around 2007, then you can expect to live to about 103 years old. Technology is advancing, people are living longer. So if you decide to give up work and retire at 65, would you have kind of made sufficient plans to have an income for another 35 years? So this is just something that you need to be mindful of. Next slide, please. So how much should you save? Like, what does it all mean when it comes to taxes? One of the best features of using a pension to save for retirement is the tax relief that you're given. So if you can afford to not have that money and access it up until retirement, a pension is the next best thing. When you pay into your pension, some of the money that would have gone to the government as tax goes towards your pension instead. This can help reduce the amount of tax you pay and give your savings a boost for the future as well. It's all based on the rate of income tax that you pay. So basic rate taxpayers can claim 20% tax relief, as this is how much tax you pay on relevant earnings. Higher rate taxpayers get 40% and additional rate taxpayers 45%. So if you pay that money into your pension yourself, or if it's taken by your employer from your pay packet, you automatically get 20% tax back from the government as an additional deposit into your pension pot. So let's put it another way. To get £100 put into your pension, a basic rate taxpayer needs to pay in only £80. And this is because the taxman then adds £20 to your pension pot. And then higher rate taxpayers need to save £60 to get £100, total of £100 saved, and top rate taxpayers only £55 to get £100 saved. And the power of starting early, next slide, please, Katie, is the wonderful compound interest chart, as you'll see. Now, good old Daisy and Ken. I love talking about this slide. Daisy, you'll see, started at age 25, and this is just as kind of an example. And she saved £200 per month versus Ken, who put £400 per month at age 45. So they both put in the total same amount of £96,000, which is the kind of orange shaded area you'll see. Because don't forget, Ken put double the amount in that Daisy did. Now, because Daisy started earlier, you'll be able to see that the power of compound interest, of starting early and then that interest rolling up and rolling up, she had an extra £210,476 in her pension pot compared to Ken, who started later, who just had just over 69,000. Now, this is based on a very modest 5% growth rate. So this is just something to kind of have a think about, as in the earlier you can start, the better. And then the next slide, thank you, Katie, is a bit of an example of why I think kind of investing makes sense. It's quite a complicated slide. Oh, I don't know about you. Is that kind of half loaded on everyone's screen? Oh, there we go. It's just loaded. So I like to include this slide because it gives you an idea of when we say we put an investment in place, the key to any investment or saving is kind of diversification, making sure all your eggs aren't in one basket. Now, this might look like an absolute load of gobbledygook, but the big shaded blue line is kind of, you'll see stocks and shares. Oh, coming back. It's all right. I think just the next one. Apologies, guys. But then you get kind of other ones as well, where you've got the red line, which is property. You've got bonds as well. And you also have cash, which is on there. So it gives you a bit of an idea of everything that goes into an investment. Now, the very final slide, this is, I just kind of want to finish off by answering some more of the questions that kind of we started off by saying. So next slide, please, Katie, if it will play ball and load. There we go. There we go. So these are the questions that we started off. And I've answered some of these as I've gone along, and I'm happy to kind of go over any again, but I just want to start by finishing kind of answering the questions. So who can help me and where do I start? Because that's a lot that I do get. Well, you're helping yourself right now by kind of listening to this. So start looking into what rates your bank is giving you. Answer some of the questions I've asked you in this, have another kind of read over of it, and listen over. When it's loaded, fill in that financial questionnaire. This is step one. And if you want a chat as your circumstances may be more complex, or maybe you just want me to run through this again with you, I'm more than happy to help and have a confidential chat. And the team will kind of tell you, hopefully, that I'm very, very friendly and you get a bit of a gist of who I am. So I did just want to kind of finish there to leave a little bit of time at the end to answer any specific questions that that any of you may have. So yeah, we'll open up the floors. Did anything come in while I was chatting, Katie?
First of all, thank you so much for that, Ruth. That was brilliant. And I'm going to hand it over to Paul, because Paul's been keeping an eye on the chat. I know there've been lots of questions come in. So Paul, if you want to pull the first one out, I'll have a little look through and see what other questions we've got.
Excellent. Yeah.
What's come?
We have lots and lots and lots. So we will try. I'll try and group them together because there's a few key areas coming. First off, where's the best place to put my money in a pension if I'm a self-employed businessman with a limited company?
Great question. Well, once again, there are lots of different options of where you can put your money. It depends for a pension. If you want to manage it yourself, and you want someone to kind of put that in place for you, that you also work with a wonderful company called Raindrop. Or if you want it actively managed, then you can go to a financial advisor like myself, and there are others that you work with as well, and we can help set a pension up for you. Now, being a limited company, you'll probably have an accountant that you work with that helps sort all of your taxes and bills, etc. There are absolutely amazing benefits of being limited, because if you pay certain amounts into your pension through your limited company, then it will come off your corporation tax. So this is really helpful, but I'm more than happy to have a chat as well about your options that are available. So just have a think, do you want to manage it yourself, or do you want someone to help manage it for you? Because like we said, there are people that you work with besides myself that can help manage everything.
Cool.
Great,
Thank you.
great question. Do you want me to pull the next one out, Paul?
I was going to rattle through this next one because there's 2 or 3 that have all come up at the same sort of idea,
Awesome.
really,
Go
which
for it.
is so is it better or more efficient to put spare money into your savings or to make additional payments on your mortgage? And then another person said, I'd like to put away £100 a month towards long-term savings. I've got a mortgage and a pension. Basically, should I put it in my pension? So should I ever pay my mortgage? Should I set up an ISA? Have you got any thoughts? There's a number of questions around, I've got a little bit of extra money. Which pot do I put it into?
So it is very specific to the person and circumstances. I'd hate to give kind of quite a broad answer, but it depends on other factors in your life. Do you have children? Are there any other kind of investments that you have? Do you have any savings to fall back on, or anything else in place? Because obviously, how big is your mortgage? There are so many different questions that all lead up to where you should put it. So you have some fantastic mortgage rates at the minute that have been quite low. So people do have great rates. So have you started saving for a pension already? How much is in that pension? Because if you haven't really got much, then like I've explained with the power of compound interest, it is great to start earlier rather than later to put money in there. However, if you have quite a large mortgage and it causes quite a lot of stress for you, then you might want to look at making payments on that mortgage. And some do actually allow you to pay, I think, a certain percentage off at the end of every year. I think the one that I have has like, you can do like 5% of the total amount of mortgage that you have that you can pay off every year. So, I mean, I can have a look at the mortgages that you do have and try and work out the circumstances that would be best for you, whether it's in a savings vehicle or whether it's best to pay your mortgage off or a pension. Apologies, it's a bit broad, but it does depend on your personal circumstances.
Super. What else have we got in there, Paul? You answered the one I was going to pull out.
Sorry. Next one, a couple of people have said they've got a workplace pension, as pretty much everyone has to. What should they do? Should they put more money into their workplace pension, or should they get their own private pension?
Great question. So there is no better kind of way to save kind of for a pension than in a workplace pension. Why? Because not only do you put kind of contributions in, but your company, your employer puts contributions in, and then the government also gives you the uplift. And your contribution comes out before any income tax, national insurance contributions is taken. So it is a great way to save. I would be asking your company and sending, gosh, your HR departments are going to love me. I'd be asking your HR departments of where you work. Do they have something called salary sacrifice? I'll say that again, salary sacrifice. So what that means is it's something that you can set up for a year. And don't forget, if you commit to it, it is a year that you do take it out kind of over before you can change it, but you can sacrifice part of your salary to be put into your pension. And the tax advantages, once again, because you're not going to be paying income tax or your national insurance contributions on that, it can only make a slight difference to your pay packet. So yeah, for the cost of it, I'd probably say go for your workplace pension scheme. But if you want me to have a look at it, and I can always find out what your workplace pension schemes are giving you. because I do want to caveat it by saying that workplace pension schemes were brought out so that everyone could save. They're very basic pension vehicles. Some of them don't have a lot of funds that you can choose from. And there is going to be a separate pensions event that VetYou will be running, or you can look back at kind of some of the talks we've already done on it, because I can talk for days on pensions. Pensions are my jam. I always say that I do love it, but just make sure that it is sophisticated enough for your needs. And like I've said, I'm happy to look into it for you if you need me to.
Cool. And unfortunately, in the vet world, our pensions are pretty much everybody in the veterinary profession is given the bare minimum legally. I know in other professions, pensions are used as more of an incentive to get people in, and they offer much more. But unfortunately, the veterinary world seems to be quite stingy on that.
I can see as well, salary sacrifice. What percentage would you recommend, or is it based on other expenditures? You could just say, thanks, Robin, for that question. Yeah, so once again, I'm not going to sit here and tell you to put 20% of your salary into your pension. It all depends on what your affordability is like. Do you come out with the financial questionnaire, step 1? How much of your income goes towards your bills every single month? Because we have to make sure that those bills are paid for. So that's step number 1. You can then, I think the standard amount is, some employers can do, sacrifice up, up to 10%. They can match some of the good ones. I know that vet companies don't tend to offer great percentage rates when it comes to salary sacrifice. But once again, you've said it's all based on your affordability. And you can ask your human resource department to look into it for you and say, if I put 5% in, how much would my take home pay be? But make sure you have that number in your head that you're not prepared to go lower than at the sacrifice of paying your bills and living a life, because not just emergency fund, people need to have a bit of a fun fund, like a bit of a, let's go out to the cinema or go and have something to eat fund. So don't be, it's like cutting off your nose to spite your face and only putting a certain amount in. I saw one as well about crypto.
Yes.
I am going to touch on crypto. It is one that financial advisors get asked a lot on. It isn't something that I specifically know of, or should I say I know of it, but I don't know the ins and outs of it, because it is an unregulated industry, unlike financial advice that is highly regulated. There's lots of peaks and troughs. If it's your thing and you like to do it, I'm not going to tell you not to do it, but I wouldn't put any more than, I always say, if you want to have fun and play around with it, have an amount in your head that I'm not going to say that you're happy to, if you lost it, would it affect your standard of living? And then maybe, if it is, then don't invest at all, but just have a bit of fun. But it's a very unpredictable kind of way of investing, in my opinion.
I'm glad you touched on that one. I was going to ask you that one next. And actually just looping back to pensions, and I know we do cover this specifically in our pensions event, which there's a recording of on our website, and Ruth has already mentioned Raindrop here as well. I have a couple of pensions from previous employers, but I have no idea how to find them or where to find them. I know you can touch on this one briefly as well, Ruth.
100%, Philippa. You can go to the government website or go on Google, just type in on Google, where can I find previous pensions? There should be a link to the government website, and it's a very simple step-by-step process. It's like, I think there's four different pages it takes you to with just one-word answers, and it just says, is it an employer scheme? Is it from a company? Yes, it is. Do you know the name of your company? Yes, I do. What is the name of your company? You put the name of your company in, and then it will pop up with all the different pension providers that were associated with that company. So you are able to find them that way. And it is look for the government website, because that will help you find any lost workplace pensions.
Brilliant. Thanks, Ruth. And we've had quite a few people. Well, first of all, someone's asked where the link to the financial questionnaire is. Paul will pop the link to our digital delegate bag where I've uploaded it there, and you can download it there straight away. Second question, we've had, Ruth, a few people talking about how they are maybe a US citizen or they're an EU citizen and they're not sure what the best route to take. Do they need quite a niche IFA? Do they need a niche financial advisor? Are there any thoughts on that? Because we know, certainly covering the UK for finances, that when you start stepping out of it, every country has its own set of regulations. So what would be your thoughts for those people?
100%. There are lots of really complex rules and regulations around either transferring pensions from another company across, or depending on where you're from, kind of if you're able to set up a UK pension. As long as you're working in the country, yes, you should be able to, but definitely just reach out to a financial advisor here and get them to look into it specifically for you and into your previous pensions that you've got, to see how easy it is to transfer across. It's not necessarily a simple process, but it can be done.
Amazing. Thank you, Ruth. And somebody has asked, can you have more than one ISA at a time? They had a help to buy ISA and they're still saving for a first property.
Brilliant. Yep. So you can have more than one ISA. So you can have a help to buy ISA, and you can have, say, stocks and shares ISA, and you can have a cash ISA. The main thing is to make sure that you stick to your, if you're lucky enough to stick to your £20,000 limit. So you can have simply £10,000 in a cash ISA, £10,000 in a stocks and shares ISA. That will make up your £20,000. So you can have a number, and what a lot of people do is shop around for the best interest rates. So it just takes a little bit of kind of, once again, go online and just research it and type in best rates, and there'll be some, there'll be a website that will come up with all the best rates at that time. And a lot of people do swap them from one to the other depending on the rates that they offer. So I hope that helps.
Brilliant answer. I'm just having a little look through because we did have loads of questions. I know, like Paul said, we've grouped quite a few of them together because they've been very similar. But Paul, have you got anything else that's come up in the chat box there?
Just one. I think you've touched on it before, but it was a bit more specific. It's if you open a LISA, a lifetime ISA for retirement rather than for your first home, does the government still give you the 25%? And up to what age does it still do that?
So lifetime ISA, do you mean for a first property?
Yes,
so
but you're not actually going to buy
the
the property. You're probably going to use it for retirement. You're going to keep it and
yeah, then it's up until age 6. If it's for retirement, then it's up to age 60, but you have to have opened it at age 39. So you can't kind of open the LISA at 40, you can open it at 39. And then to make it more complicated, you can only save into it up to the age of 50. And then you can access it at 60. I didn't make the rules. I can just tell you what it means. So yeah, but you can use it at age 60 for retirement.
Amazing. And someone has asked a very good question, which we can direct you to a fantastic resource on. What resources would you recommend for looking into ESG funds and ISAs? And actually, in a month from now, on the 22nd of March, Ruth managed to connect us with a fantastic investment specialist that knows just about ESG funds and is running an event for VetYou on sustainable investments, which we will flag for you. We're doing a whole hour on that. And Ruth, you'd said the gentleman that's coming to speak for us, it blew your mind, didn't it?
But honestly, you guys are so lucky. This guy, he does talks all across the UK and internationally as well. And he blew my mind, and it's not complex stuff. He talks in the same way I do, makes it very easy to kind of understand, and explains to you all the different types of environmental, social and governance funds that you're able to invest in and why. Also gives you percentages as well. For instance, I can't remember the exact amount, but it's something like 7 times more effective to save into an ESG fund for your pension than it is necessarily to, say, stop eating fish or meat, or, flush your toilet less or switch off a light bulb or something. Wow. And he gives some fantastic facts and figures, and really explains to you the impact that it can have, and also what kind of percentages in the past they've kind of had from investing in these funds. So I highly recommend anyone gets on it, because you're very blessed to have him come in and give this chat. I'll be on it, and there's always something else to learn.
Oh, well, thank you so much, Ruth. And we will pop that link up because we're signposting that as one of our next sessions that are coming up. We've got time for, I think, one last question, because we're very aware of everyone's precious time and we're coming up for the hour. Can anyone with a bank account open a lifetime ISA, or do you have to be a citizen to open one?
Yeah, as far as, it's a great question, obviously very specific for that one. As far as I'm aware, I think you do have to be a UK citizen to open one up. And you can only save into them, obviously, if you are based within the UK. But I'll have to double check that. But please, yeah, just reach out to me, and I'm more than happy to look into that into more specific detail.
Amazing. Thank you so much, Ruth. And we've got a lovely comment. Thanks for this. Definitely has prompted me to do a financial spring clean. And thanks so much for this session. I've taken my ostrich head out of the sand and booked a call with you. Y'all are awesome. Oh, thank you. So
brilliant.
Obviously, Ruth has very kindly opened up her diary. As she said already, all the first chats are all complimentary. Ruth is very clear that about when and if anyone gets charged, you're not suddenly going to find out, oh my goodness, here's a bill arrived. And she's happy to answer your questions and your worries, because one thing that we know about Ruth is that she's massively passionate about helping people. She does want to be your best financial friend, and she's always happy just to answer your questions as well. So I just wanted to wrap up from a VetYou point of view, because you know what, you have gifted yourselves this hour of your time to sit here. So we may as well take some action off the back of it. So I just wanted you all to think about, first of all, what was your key take home from this session? It would be lovely if you could share it in the chat with us. Just means that we give ourselves that moment to reflect and think about it. The second thing is, just like we said, Ruth, and I know that a good number of you have already booked these in because I've seen them pinging through. She has a brilliant system on Calendly, meaning that you can book a call in with her. She's lovely. I can't say any more times that I know that Ruth will just help you out. If you are worried, she's not going to bamboozle you. She just wants to help. So please do book in a call and talk through your individual circumstances, because just like our own patients, we can go to a seminar or a webinar on kidney disease for cats, but really to know the best thing individually is probably to speak to someone on that level. If we can help you with something else, if it is on a different topic, like Paul said at the beginning, please don't wait. If you want help with mortgages or further into pensions or taxes or accounting, please don't wait for those sessions at the end of the year. We can help you sooner if you need it. So remember, drop us an email, hello@vetyou.co.uk. Check out our full events menu. Paul will pop all these links in the chat, because we've got 14 events scheduled in so far. We've got the vet nurse event that's just been added as well. And I have no doubt through the year we're going to have more. Don't forget, check us out on social media too. Spread the word to your colleagues and friends in the vet world, because you know what, as the 4 founders of VetYou, we put an awful lot of time into this because we so think it's important to this profession. That's why we make all these events free. That's why we partner with incredible people like Ruth to mean that, and we find people that will explain this in terms that make sense in the short period of time that we've got spare. So a huge thank you, first of all, to Ruth for her time and her kindness and her expertise, and for answering all of your questions and for providing that support around the outside of these calls. And thank you to all of you for your time and being here, because we know it's busy out there. We know it's hectic, but well done for doing, just as you said in the chat box, taking your head out of the sand and taking some action. The next 2 events that we've got coming up are, if you know any final year students or recent graduates or 4th years, we collaborate with the Association of Vet Students, the AVS, to run something that I'm sure we would all have appreciated back when we graduated, which is helping new graduates through the things they need to know for personal finances for the first 100 days in practice. So that involves everything from pensions, income protection, budgeting, what is a salary, what is a package, what happens if I take a car, etc. So that's a fantastic session. Please do share that with any new graduate friends or students that you know of. And as we touched on in our Q&A before as well, we have our sustainable investments, where we look at those ESG funds and what that all means, what options we've got, what returns that obviously are not historical does not mean that's what's going to be moving forward, but we know that we have a fantastic speaker on that topic too. So please do dive into that one as well. And again, just thank you all for being here, and just know we're always at the end of an email. And whatever topic it is, I know I saw a few people in the chat saying, what if I don't want to buy a product? What if I just need my financial anxieties and a couple of questions answering? You know what, still drop a message. There's still plenty of people out here to help you. And if you're wondering it, somebody else is probably wondering it as well. So I can see lots of lovely comments coming in and lots of lovely reflections as well. So thank you so much for those. And hopefully we shall see some of you on the next event on the 15th of March, if not the one after in a month from now, which will be taking us to the Sustainable Investments event. So please do make sure you signed up to that one. Paul's popped the link in the chat. And thank you again to Ruth and to everyone for being on here. And I'm going to stop the recording now. Thanks, everyone.